Hey everybody, welcome to Mortgage Today for Wednesday, September 11th, 2024. And oh, what a day it was. UMBS opened down 7 BPS. Stock futures down 20 points. Bonds were slightly stronger heading into the CPI data, but have given up those gains after the release. Unlike CPIs of the past, this one was probably not destined to have a huge impact without a much larger deviation from expectations. After all, 0.251 is the lowest possible unrounded number that gets a 0.3 core CPI. Shelters the bigger issue and likely a better justification for the initial selling pressure. Headline CPI MOM equals sign 0.2 versus 0.2 FCAST. 0.2 Pre-V, headline CPI YOY equals sign 2.5% versus 2.6% FCAST. 2. 9% Pre-V. Core CPI equals sign 0.3 versus 0.2, FCAST unrounded 0.251, core YY CPI equals sign 3.2 versus 3.2, FCAST 3.2, Prev Shelter CPI equals sign 0.5 versus 0.4, Pre-V. The Fed funds futures are now coalescing around a 25 basis point cut. Heading into today's CPI data, there were valid doubts about the data's role as one of the two biggest market movers, the jobs report being the other. Those doubts proved to be well-founded as far as MBS and Treasuries are concerned, with all of the initial reaction being erased in the first 2 hours of trading. Specifically, bonds lost ground after the data, but gained it all back. The only place we see any lasting negative impact is in near-term Fed funds futures, where CPI has further tipped the scales in favor of a 25 BP rate cut next week. So why aren't other bonds suffering? It all goes back to the thesis that the overall pace of rate cuts matters more than the size of the first one. Bonds initially sold off following the higher-than-expected core CPI reading this morning. Shelter inflation spiked back to troubling territory as well, something that was perhaps an even bigger problem for bonds. Nonetheless, bonds moved back to stronger territory in short order. The only lingering damage was to the Fed's rate cut outlook for next week. Markets were already squarely in the 25 BP camp, but today's data went a long way towards sealing the deal. When it comes to the longer-term rate outlook, today means nothing. The Fed and financial markets would be hypocritical if they allowed one inflation report to materially alter the outlook. UMBS closed the day down 8 BPS at 101.47,